Good evening, everybody. Happy Easter and welcome to the April 8th edition of the Lock in Your Success Market and Trade Update. If you remember last week, we were saying we were still bullish, and that the past 2 Mondays we had a large up move, and we were expecting another fairly large up move last Monday, and we got it. And again, as happened the last 2 Mondays, the bulls were disappointed, and once again the bulls are disappointed. Um, Normally I'd be saying, well, if we talked on Thursday, I'd be saying, looks like we've set up again. We're back at a support. We've set up for another large up move on Monday, and we would have to see what would happen from there. If you look at the other indexes as well, right? Again, we're still bullish. SPX, we are still bullish. And the Dow, well, we've just basically come back to the support area, which is technically bullish, even though we've broken our diagonal trend line. Unfortunately, we come in here, if we go into the futures, we got that bad, or at least less than expected, employment data on Friday, and that pulled us down pretty far. So it pulled the Dow down about 130 points, and the Russell down about 14 points. So what we have here, if we come back to the Russell chart, because that's what we're most interested in, that's what we're trading, we've got a lot of buyers here who are disappointed if we gap down and hold. So I would expect it to be a little rocky in the morning. Overall, though, I think we're just going to be fishing for our next horizontal support point, which is somewhere down here at, can be argued, at the 780 level. And if we get a little harder pull back to normal, the 775 is pretty strong. So I'd be bullish again at that point. If we're looking at the NDX, we're going to break off diagonal if the futures are still down in the morning. And we'll probably be coming down to 2650 if it's a hard pull down. If it's a moderate one, maybe 2700. The SPX, I would expect we come back down to this into this support range here, which would tie in nicely with our primary trend line, and I'd be bullish at that point. And as far as the Dow goes, anywhere that could turn more than likely at about 12,750. So overall, even though we are breaking our primary trend lines here, or our more aggressive trend lines, we still have a lot of horizontal support. Basically, once we flush out the longs here, I imagine the market's going to go back up again. Of course, you'll have to watch this a little bit, because what tends to happen sometimes too is you'll have the all the longs here are going to get flushed out, and if it comes back aggressively, and if we actually close higher for the week, higher than the close of last week, then that would be extremely bullish, and we'd be expecting a move higher. If we break down under our trend lines, come back up and retouch them, and possibly start to roll again, then almost for sure we're heading a little bit lower. So that's pretty much what we're looking at. We're going to have to see how this Monday move plays out. If it holds for a couple of days, then like I said, we're going to be fishing for our horizontal support levels. If it breaks back up by midweek up over our primary trend lines again, that would be considered very bullish. So it's kind of a wait and see type of thing. As far as our trades go, if we're looking at the April M3 trade, this is what it looks like. It's projecting, if we opened up where we closed on Thursday, a profit of around $770. One thing I do want to point out is this T+0 line I do not believe is accurate. I closed Thursday at negative delta. Then after market close, the line kind of got crazy here and went positive delta. So we should look actually a little bit better than we look here. 15-point gap down. It's going to be right around here at 803. Not a problem at all. As a matter of fact, I would like this to migrate down to about 795 and kind of hang out here. If you advance the date forward, being this close to expiration, the profit comes in the trade really quickly. So not too much of a concern. We start pulling down under 795, I'm going to have to do something here and to deal with that. Even if we close under 800 in the next day or so, I may end up doing something here to flatten the delta out to the downside. kind of hard to tell now that the line's kind of crazy, but that's how that goes. And like I said, this if we get a harsh move down tomorrow, it's going to temporarily rip the profits out of this, even if I am flat delta, simply because the market's moving. As soon as it settles, I should come back in. But all is good. If, like I said, we start pulling under 800, we'll start adjusting this. And let's see, the other trade we have on is the May bearish butterfly, and that looks like this here. Remember, we were forced with a delta roll because of the low volatility, and this happens with this if you follow the guidelines. Sometimes, especially we come into some of these major support areas when no, I'm sorry, the major resistance areas when we're overextended. A lot of times when you're doing these delta rolls, you kind of get caught a little bit to the downside. Let's see, a 15-point gap down is going to put us down into here. We still won't hit an adjustment point at that point. If we get down into the 795 range, we're going to be looking at having to pull this 840 butterfly off. So that's that's how that goes. A little bit of a whipsaw, possibly. I don't know that we're going to go down that far, but if we do, then we'll just take the appropriate measures. But either way, this trade looks pretty healthy. As of yet, we still have not entered the May M3 trade. Like I said, I was waiting to this cut into a little bit better shape. Not this one here, but the April M3, which is in decent shape now. We'll see what happens with the markets tomorrow. We may end up entering that early this week. And if you want to take a look at our modified bearish butterfly, that's where we do a little bit of trade planning and review the market conditions before we go in. As you remember, I entered this one a little bit late, and we were thinking the markets are kind of topped out, and I went in actually with a Russell at around 830 at I think maybe even a little higher. I think it was an 835 or so, and I went in at an 810 butterfly, and I was my delta theta ratio was actually a little bit too high when I entered, but again, this is a modified plan, and my theory here is if the market continues up, 810 is a good reference point, and if the market comes down, then I really don't have any trouble with that there. So that trade looks like this. It's currently up approximately $4,300 with a profit target of 15,000. Obviously, this down move here is nothing but good for this particular trade, and I will start rolling the reference point and changing the way this is scaled into if we get a harsh down move. But for now, this trade as well is doing fine, and we can track this weekly. But I'm not going to be doing market updates on this one every time I do the others. So I just wanted to show you the difference. All right, I think that's it. Hold on for Monday morning. It doesn't too bad just yet, but we'll see where that goes. And have a great week trading, everybody. Thank you. Good night.